XRP coin, hidden crypto gem or high-risk investment? What if I told you there is a cryptocurrency that has survived lawsuits, regulatory pressure, extreme volatility, and years of controversy, yet still remains one of the most talked about digital assets in the entire crypto market? A coin that was once seen as a top competitor to Bitcoin and Ethereum, then nearly written off by the market, and now again gaining attention from investors worldwide. That coin is XRP. And the big question today is simple but powerful. Is XRP a hidden crypto gem with massive long-term potential, or is it actually one of the highest risk investments in the entire digital asset space? To answer this, we need to go deeper into its technology, use case, legal battles, and future potential in the global financial system. XRP is a digital asset created by Ripple Labs with the goal of transforming global payments and cross-border transactions. Unlike Bitcoin, which is designed as a store of value, XRP was built for speed, efficiency, and financial settlement between institutions. The idea behind XRP is to make international money transfers faster and cheaper by acting as a bridge currency between different fiat currencies. Instead of waiting days for bank transfers, XRP aims to settle transactions in seconds at very low cost. Over the years, XRP has gained both strong supporters and strong critics. Some see it as the future of global banking infrastructure, while others view it as a highly centralized and risky crypto asset. In this video, we will break down XRP's fundamentals, real-world use case, legal challenges, adoption potential, and investment risks to understand whether it is truly a hidden gem or a high-risk speculative asset. Before we continue, if you enjoy deep crypto breakdowns like this, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss future insights. 1. XRP is a global payment solution. XRP was designed to solve one of the biggest problems in traditional banking systems: slow and expensive cross-border payments. Today, international transfers can take several days and involve multiple intermediaries, each charging fees. XRP aims to eliminate this inefficiency by enabling near-instant settlement between financial institutions. Its network is built to process transactions in just a few seconds, making it significantly faster than traditional banking systems. This use case is one of the strongest arguments in favor of XRP's long-term relevance. 2. Speed and low transaction costs advantage. One of XRP's biggest technical strengths is its transaction speed and extremely low fees. While Bitcoin transactions can be slow and expensive during network congestion, XRP transactions settle almost instantly and cost fractions of a cent. This makes it highly suitable for financial institutions that need to move large amounts of money quickly and efficiently. This efficiency is one of the key reasons Ripple has positioned XRP as a bridge currency for global liquidity. 3. Ripple's focus on banking partnerships. Ripple, the company behind XRP, has actively pursued partnerships with banks, payment providers, and financial institutions around the world. The goal is to integrate XRP into existing financial infrastructure rather than replace it completely. If successful, this strategy could position XRP as a key liquidity tool in global banking systems, especially for cross-border settlements. However, adoption is still developing and has not yet reached full global scale. 4. Regulatory pressure and legal uncertainty. One of the biggest challenges XRP has faced is regulatory uncertainty, especially in the United States. Legal disputes between Ripple and regulatory authorities have created long-term uncertainty around whether XRP should be classified as a security or a digital asset. This legal pressure has significantly impacted market sentiment in the past and remains one of the key risks for investors. Even though progress has been made, regulation continues to be an important factor influencing XRP's future. 5. Centralization concerns and debate. Unlike Bitcoin, which is fully decentralized, XRP has often been criticized for being more centralized due to Ripple Labs' influence over supply and development. A large portion of XRP tokens were initially held or controlled by Ripple, which has raised concerns among some investors about decentralization and fairness. Supporters argue that this structure allows faster decision-making and institutional adoption, while critics see it as a risk factor compared to fully decentralized cryptocurrencies. 6. Real-world utility versus speculation. One of XRP's strongest arguments is its real-world use case in global payments. Unlike many cryptocurrencies that rely heavily on speculation, XRP is designed for practical financial utility. However, in reality, a large portion of XRP's price movement is still driven by market speculation rather than actual transaction usage. This creates a gap between its intended purpose and current market behavior, which investors must carefully consider. 7. Competition in the blockchain payments space. XRP is not the only project trying to solve cross-border payment problems. There are multiple blockchain networks and fintech solutions competing in the same space. Stablecoins, central bank digital currencies, and other blockchain-based payment systems are also emerging as alternatives. This competition could impact XRP's long-term dominance in global payment infrastructure. 8. Market volatility and investor psychology. Like most cryptocurrencies, XRP is highly volatile. Its price can experience sharp movements based on regulatory news, partnerships, and overall market sentiment. This volatility creates both opportunity and risk. Traders may benefit from price swings, but long-term investors must be prepared for uncertainty and emotional market cycles. 9. Adoption potential in global finance. Despite challenges, XRP still holds strong potential if adoption within financial institutions continues to grow. If banks and payment networks increasingly use XRP for liquidity and cross-border settlements, demand could increase significantly. However, this depends heavily on regulatory clarity and real-world integration at scale. 10. Long-term future outlook. The long-term future of XRP depends on two key factors: regulatory clarity and real-world adoption. If Ripple successfully expands its network of financial partners and regulatory issues stabilize, XRP could play an important role in global payments infrastructure. However, if adoption remains limited or competition overtakes its use case, XRP may struggle to maintain long-term dominance in the crypto market. XRP remains one of the most controversial yet closely watched cryptocurrencies in the market. It offers a strong use case in global payments, fast transaction speeds, and potential institutional adoption. At the same time, it carries risks related to regulation, centralization concerns, and market competition. This combination makes XRP neither purely a hidden gem nor purely a failed project, but rather a high-risk, high-potential digital asset. For investors, the key lies in understanding both its strengths and its uncertainties before making long-term decisions. If you found this analysis helpful, make sure to like this video and subscribe to the channel for more deep crypto and stock market breakdowns. Comment below and share your opinion. Do you think XRP will become a major global payment system, or will it remain a risky speculative asset? Your thoughts matter, and I read every comment. Thanks for watching, and I'll see you in the next video.